Good afternoon and welcome to Brownfield's weekly livestock market update. I'm news anchor reporter Meghan Grebner. With us this afternoon is University of Missouri livestock specialist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We have a lot on our plate to talk about this week, so let's get right into it. Let's start first and talk a little bit about that hogs and pigs report that came out today, because I think it sounds like there were some surprises in there.
Absolutely. When you look at that report relative to pre-report estimates, a couple things stick out to me. Number one, more market hogs than we thought, setting about 2% higher than we were a year ago in terms of market hog inventory. If you look at pre-report estimates, the average of those would have suggested we'd be up about 0.6%. So more market hogs. All right, number one. Number two, breeding inventories up about 1% relative to a year ago. That's higher than we expected pre-report as well. So you already start to hear this tone of more hogs than maybe we expected out of the report. USDA now for, I think now 3 consecutive quarters, has been going back and upping the number of pig crop that we have historically. So if all of that continues, I think we've set in motion for very ample supplies of hogs in the marketplace come the fourth quarter of 2016. So right now I kind of worry about some of the pressure we might see on hog prices as we move through the remainder of this year.
As we look at looking for a place to put those hogs, obviously we're still looking out to 2017 and those slaughter facilities coming online. We don't have the space right now. What does that mean for pork producers and their profitability as we wind down and go into the last quarter of 2016 and head into the first Q of 2017?
Yeah, you're absolutely right. You know, we wish we could have some of those new slaughter facilities on board perhaps this fourth quarter of 16, but they won't be there. I always tell, now producers, be careful that last quarter. Profitability could look really good and fall off the table really quickly. The period that we hang that last shackle and it's full, if I've got the hog that needs to go next and there's no shackle space, that hog's not worth very much any longer. So I will encourage folks to think hard about how they want to handle that price risk management situation that may face us in the latter part of 2016. So again, I think we can look in the short run and go, getting through that Q4 of 2016 could be rough, but as you've mentioned, once we get beyond that and some of these new facilities come on, I think things look better in terms of capacity issues in 2017. So make sure as producers think about that price risk management that they think hard about what happens that fourth quarter.
Scott, does that also potentially mean further expansion if we're looking for a place and we've got all that extra space in 2017, and are we starting to see some of that now?
Yeah, so potentially I think we are, Megan, and you ask a really good question. So number one, we haven't built this many hog processing facilities for a long time. Just because we have the capacity to slaughter hogs, then we got to worry about where's that pork go ultimately out the other end of those new plants. I guess we might hope we're going to export more pork as we look ahead in 2017, but ultimately we slaughter more hogs and we're going to have to maybe consume more of that pork domestically as well. So pork prices could struggle even into 2017 with more pork supplies. I think producers may be in a better position in trying to sell hogs in that we could really narrow packer margins in 2017 with that additional capacity. So I think it just depends on where you sit in the string of pork production in terms of whether you like more pork processing capacity or not.
And we're going to talk about those exports a little bit later, but let's first talk about the cattle on feed report. A little boring, a little bit of a snoozer.
Absolutely. So perhaps boring relative to pre-report. We thought we would have more cattle placed on feed in May, and we are up about 10%, maybe a little more than pre-report estimates. I remind folks that May of 2015 was maybe abnormally low in terms of placements, and so I think that's part of the reason for the larger increase. But on top of that, I think we continue to see a lot of calves, heavier calves, moving from wheat pasture that's also pushed that number a little higher. So I again will say here we got more cattle coming. if you look at on feed, June 1 out of the report up 2%. We just kind of continue this steady march of more cattle supplies, and even in a good demand situation, you add more supplies of cattle to the market, and it continues to be more problematic from a price standpoint.
We have more cattle coming to market, but are we seeing some changes in the cattle that are coming to maybe offset that as well?
Yeah, I think when you look at the livestock slaughter report we got, it does show a little bit of good news for us in that we're actually down in terms of cattle weights relative to a year ago for the first time since 2011. So although we're slaughtering more cattle, a little less poundage certainly helps balance that equation a little bit more. I just remind us, when you look back just a couple months ago, we were up about 16 pounds relative to a year ago. Now I've already fallen below 2 pounds relative to a year ago. So a big change in the last couple of months in terms of slaughter weights. That may help us balance, again, more cattle coming to market, and might give us some price strength, all else equal. So we got both sides of that equation happening on cattle, and I'll sometimes say thank goodness. If we're going to continue to run cattle supplies 2% or above for the remainder of 2016, and we're adding more weight to them, I'd be worried about the supplies of beef coming to the market as well.
All right. We can't avoid it. The Brexit vote yesterday, the UK voted to exit the European Union, with I think the exception of what Scotland voted to stay within. Markets have been haywire. Commodity markets already were down this week, and this did not help any. When we look at that relative to the livestock sector, where's our biggest concern?
Yeah, good question. So, Megan, this answer is crystal clear right now, as you know, since this all just happened in the last several hours. But I'll take a shot for you today of saying, number one, I think my concern is going to be for U.S. exports of ag products. We've talked about this, I think, for several weeks running, that we need strong exports really across the board for all commodities, given that we're increasing domestic supplies in almost every case of ag commodities in this country. We tend to see people finding the dollar as a safe haven, if you will, in these periods of uncertainty, and that only means the dollar is going to strengthen for us against a number of currencies. And I think whether it's more than the European Union currencies that we have to worry about. I think we strengthened, for example, relative to the Canadian dollar today. So in terms of some of our competitors in some of those world pork markets, for example, we're not as competitive as we were the day before. Now, having said that, I think there's more information that needs to come out. Markets need to digest where we are, but it tells you these kinds of events can certainly shake markets, and if they continue as we would traditionally think they will unfold, I will be concerned that a stronger dollar will curtail our ability to be competitive in some of these world markets, and that's unfortunately coming at the wrong time for us. So I do think there are some issues that we really need to be paying attention to as that dollar probably appreciates against a number of currencies as folks look for what they will think is a safer haven for money here in the short run.
Because a stronger dollar means our goods are more expensive to those foreign countries that are importing, correct?
Our goods are more expensive for, let's say, consumers in other countries, but are also, we don't compete as well against other suppliers as well, so it cuts both ways for us in terms of our product may not be priced as attractive as our competitors, and yet consumers in those other countries find it very high priced as well. So not really good news given all we've talked about with us needing increased export strength as we look ahead.
Let's wrap up and look at, I don't want to say it's a positive note, but maybe livestock producers are taking a little breathing a little bit easier after this week in the commodity markets, and seeing a little bit of a break, at least for inputs.
Yeah, so I think you can look at corn prices, and we've come down significantly in corn as we've gone through the week. We've got a big report coming out next week in terms of where we see corn and soybean acreage with USDA's acreage report coming out on the 30th. So that's going to be important for us. I think we've gotten some rains in some parts of crop country that have potentially moved those prices lower. I think again, we continue this pretty close balancing act between input prices and pork and beef prices as we look ahead. And so we've had our share of especially lower cattle prices as we've looked over the last couple of months. It's nice to see corn come back down to maybe help us keep some black ink setting here in this industry. So we'll see what we get, and of course we're not done. I continue to say this crop's not in the bin, and I see some really good crops as I go across the country, and I will say, sitting here in Missouri, we need more rain. We got a little rain this week, and I think that has been helpful to us, but I think I heard someone say, we need a timely rain about every week here for a while, and I would agree. There's not a lot of subsoil moisture left, so we'll see how this all unfolds, but markets certainly have moved lower.
July is definitely going to be an interesting month for the commodity prices.
Absolutely. That weather is going to make a lot of difference, and I'm still going to be really curious to watch the acreage report that we get here next week. I think a lot of folks will say we're going to find maybe a little less corn was planted and a few more soybeans were planted given relative prices. What USDA tells us was actually put in the ground. If it varies a lot from that kind of intentions, well, I think we could see corn and soybean prices move a lot after that report as well.
Plenty for us to talk about next week. Scott, good to see you.
Absolutely.
We will talk to you again next Friday. Thanks, Scott.
Thanks, Megan.
I'm Meghan Grebner for Brownfield.